Next up here, elf on a shelf. Or shall we call it elf fell off a shelf? Maybe, okay, something like that, okay? So elf, what's going on here? Okay. D grade income statement for elf here. Not good, okay? Revenues look good. Net sales up to 343 mil from 301 mil, right? Gross profit went to 238 mil from 214. SG&A increased dramatically year over year for the company, 231 mil versus 186 mil. Operating income went down to $7.7 million from $28 million in the same quarter last year, right? Also, they had an other expense in the quarter of almost $2 million versus the previous year's quarter. They had a other income, basically of $3.8 million. They're just getting hit by everything. Interest expense hit them hard, $9.1 million interest expense versus $3.7 million. Net income fell to $3 million from $19 million. Diluted EPS fell to 5 cents from 33 cents. So it was just like, I don't want to say everything that was going wrong could have gone wrong for Elf, because if everything truly went wrong, revenue and gross profit would have went down as well. The only reason this company snuck out with a D grade is because that net sales grew and because gross profit grew. If it wasn't for that, this would have maybe been an F grade-ish income statement here, because the expenses just, they were getting hit by everything in this quarter, right? No, they put out their latest guidance number, all right? And for the fiscal 2026, which they're now moving into. And they're guiding for 18 to 20% revenue growth. Now, some people are looking at that and they're like, that's it? They're like, that's it? Elf going up on price of the products, right? We know sell-through is very strong. They have international expansion. And additionally, they're going to have a full year of the Road acquisition. So people are looking at that and like, 18 to 20%, like we were hoping for more. Like we were hoping for 25 or 35% or 30% or something like that, right? Only 19% at the midpoint? I don't know. Like, we wanted more than that. And I can completely understand that, but you got to understand something deeper here that's going on, okay? Listen, Elf just missed revenue estimates the second quarter in a row, okay? That's not good. Terang doesn't ever like to miss revenue estimates. And he just missed them twice in a row, okay? They missed this quarter by $21 million, and they missed last quarter by a very slight amount, okay? Now, look at prior to these last two quarters. Beat on revenue, beat. Look at how many quarters. How many quarters did they beat revenue in a row? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. At least 19 quarters in a row. At least. 19 quarters in a row they had beat revenue, and now they missed it 2 straight quarters. So if you're Terang and you're the management team, you're a CFO, you think you're going to come in and put some big number to potentially end up missing in the end? No. You're going to put out a number that you're extremely confident, regardless of what Trump does and the tariffs and the blah, 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 and the government shutdown, regardless of everything in the world going on, you're going to come in and beat that number. That's what type of number you're going to put out there, right? Because we know Terang and the team, they like to beat numbers. They don't like to miss. It's embarrassing for them to miss, and they missed 2 straight quarters, right? So that's what's going on there, okay? Now, so basically the moral of the story is I think they're going to do way better revenue growth than what they posted. 19% midpoint, they'll probably blow that away, okay? We'll see. Maybe they don't. Maybe they just keep missing revenue. Maybe Elf's done. They just miss forever and ever. I don't think that's the scenario, okay? Next thing you got to understand is a little bit deeper about Elf stock, okay? It's very important everybody understands this. Listen. Elf stock is one of the most volatile stocks you'll see in the stock market. And it's kind of confusing because it's a cosmetics company, beauty company, and you're looking at it and you're like, how could this company be this volatile, right? This company goes IPO kind of toward the end of 2016, right? IPO somewhere very shortly after in the $20 to $30 range, high 20s to low $30 range, right? You know what happens over the next couple of years? The stock goes to $7. That's when Jeremy Lefebvre steps in and buys it, right? I still have my $7 shares in the public account today, right? Then the stock goes on to 2x, over 2x, essentially. It goes on an epic run all the way up to, $15 to $20 a share. Massive run. Then you know what happened after that? Elf stock crashed all the way down to about $10 in the Rona crash. You know what happened after that? Stock skyrocketed over the next year or two, all the way up to $30 a share. You know what happened after that? Stock crashed all the way down to $20. You know what happened after that? Stock went on a historic run from $20 to $200 over a couple year span. You know what happened after that? Stock crashed all the way to $49, which is where it was at in the not the Rona lows, in the 2025 lows of this year back in April. Go look at ELF stock. It was at like $49 a share at the lows, somewhere in there roughly, right? So it goes from 200 down to 50, then it bounces strong all the way up to 150, and now the stock crashed again, and I don't know, after hours it's somewhere between $90 and $100. But what can you take away from this? Okay, what can you take away from this, ladies and gentlemen, from this company? It crashes a lot. It skyrockets a lot. But guess where it goes over the long term? Up and to the right. Terrain runs this company on a phenomenal level, and it goes up and to the right. And so this crash that we're going through now, right, in the end, it's not going to matter. Just as we don't think about the $20 crash anymore, or when it crashed to 7, or when it crashed to 10, right? Or when it crashed earlier this year to 49. It all just becomes a kind of a blip on the radar. Because at the end of the day, if ELF really executes on a high level in this company over the next 3 to 5 years, the company is likely going to be a $300 to $500 stock. They're going to become a cosmetics giant. Cosmetics giant. As in one of the biggest companies in the world over this next 5 to 10 years in the cosmetic space. Like, they have a great opportunity for that, to displace some of the biggest brands in the world, right? And so it is what it is, man. Like, you know, as far as the stock in the short term, like, it's just another one. Like, I've been in the stock for years. This is all the way back when I bought, right? Look at how many crashes I've been through. Never mind all the corrections that you hardly even see now on this, right? Remember all these corrections the stock has had? Like, countless corrections. Some were severe corrections, and then had a multitude of crashes. Look at how many have happened over the years. I've dealt with at least 4 now. I've dealt with at least 4 crashes in ELF stock now since I got into stock, you know, years ago. And I've dealt with, 20 corrections in the stock and probably 50 pullbacks in the stock. Like, whatever. Like, you know, it is what it is in regards to that, right? Now, this is a message I gave the private stock group yesterday, right? It said some noobs are already worried and scared with the NASDAQ down 2 to 3% from all-time highs. So imagine we get a 10 to 15% drawdown. They'll be in full-blown panic mode. Some folks would never make it through Q4 2021 to Q4 2022 drawdown of 37% in the NASDAQ, right? Only the strongest survive. The thing you got to understand is, you know, and I think this is a great time to talk about this, right? Because I looked after hours and I was like, man, stocks are just getting obliterated all over the place. Like, Pinterest, I think, was down 20+%. Duolingo was down like 20%. Robinhood was down. Obviously, Honest stock was down over 10%. ELF stock was down 20%. And so I was like, in the market, right, you got to understand you're going to go through some very severe crashes, corrections. Some are going to be in the whole market. Some are going to be in your individual stocks. Diversification matters significantly. So if you have, because sometimes there's going to be some stocks in your portfolio that just suck. They're just not working out. That does not mean that was a bad investment. That doesn't mean they're not going to work out over the next few years, but they might be going through something short term that you didn't foresee it being that bad, right? And you can't bat 100% in this game. You're going to be wrong sometimes. You're going to be wrong about the short term of your company's businesses sometimes. Sometimes you're going to be wrong about the long term. And you'll hold a stock for 3 or 5 years, not make money on it, and realize it was just a dud, right? And it just wasn't meant to be. That happens. That's the cost of doing business, right? You know, I'm not going to flex. I don't want this to come across as flexing, okay? But I'm going to tell you a little bit about me. I started in a 1-bedroom apartment when I moved out of my parents' house. And then I moved to a 2-bedroom apartment, and then a 3-bedroom apartment. Then I rented a house. Then I bought a house, right? And I bought another house and bought another house. And now I live in a $3 million plus house. And I'm building a $5 million house right now, overlooking the city. And that's over 17 years of grinding. And you know how many crashes I've been through over that 17 years? Oh my gosh. If I had $1 for every stock that has crashed for me, I would have enough to build a $7 million house maybe, or a $10 million house. It'd be ridiculous. It happens all the time. Every year, I'm going to have some stocks in my portfolio that crash. It's the cost of doing business. Sometimes I'm going to have stocks that don't work out, and I'm going to sell for a huge loss. Cost of doing business. Do I sweat it? Nope. Because it's the cost of doing business. You can't have, I just showed you guys, Revolve is a 7th active position. Not even all the ones I sold off over the years like Tesla and all the others, right? 7th active position in the public account that has a triple-digit gain. How do you think I get the triple-digit gains? I got to go through the pain too. You don't get those insane gain stocks without going through pain in other stocks. If I'm going to buy a stock that's going to go up 2,000%, I might end up screwing up another stock that goes down 50%. So I put $100,000 in one stock, goes up 2,000%. My $100,000 becomes $2 million. Put $100,000 in another stock. I screwed up, got it wrong. It goes down 50%, right? Completely crashed. And that 100,000 went down to 50,000. That's fine. That's fine. It's the cost of doing business. And so you got to understand, like, as long as you're doing the right things when it comes to judging these companies' fundamentals, income statements, balance sheets, cash flows, P ratios, running your projections on 1000xstocks.com, all that good stuff, right? Making sure you're paying a fair PE, making sure you're running your compounded annual growth rates, right? And trying to figure out, okay, is this stock actually a buy? Is it, how high a risk is it, right? And keep in mind, if your bear case for a stock looks pretty ugly, then that bull case better be really, really dang exciting. Like I showed you with AMD, right? AMD comes with, I think AMD comes with certainly plenty of risk over the next 4 years. But guess what? AMD also could be one of the biggest gainers of big tech over the next 4 years. Like, would I be shocked if over the next 3 or 4 years, AMD was the best gainer of big tech? I wouldn't be surprised at all. I'd be like, oh yeah, I could have saw that, right? At the same time, if AMD was like a flat stock for the next 3 or 4 years, would I be shocked about that? And I'd be like, no, it was a possibility. That was a 10% probability. That could have happened as well, right? So that's the name of the game. And you just grow and grow and grow over time. But there's no way you can play this game without pain. You can't have the success without the pain. Ask any athlete that's, been successful at their sport. Guess what? There's a lot of pain that comes along with that. You know how many losses they have to take to get that championship? You know how many hard training sessions they have to go through to get that championship? There's plenty of pain. But if you aren't willing to deal with the pain, you'll never get the gain. And you'll never live the life that you want to live, your dream life, whether that be to live in a certain type of house, whether that to be drive a certain type of car, whether that be to retire early or, retire family members or give lots of money to charity, right? I can't wait I'm looking so forward to December because every December I give to charity, right? And then, far majority of my money, 90% plus, if not 99% of my money will be donated to charity when I die. So, what are your goals? You're not going to be able to achieve your goals if you're not willing to go through the pain. There's no doubt about that, man. You'll never live that sort of life. You want to eat at certain types of restaurants. You want to go on certain type of vacations that you always dreamt of. Like, man, I wish I could go here, but I can't go there because, I don't have the funds for it, right? Man, I would love to retire my parents, but I just can't do it because I don't have the money for it, right? I want to do this. I want to do that. Oh, I want to pay for my kids' college, but I just can't do it because I don't have the money for it. And I want to set up my kids up for life, and I just can't do it for it. Like, all these things that people want to do, they can't do because they're not willing to go through the pain. You got to be willing to go through the pain. And the pain is also doing all the research work on these companies. You know how many late nights I've spent to 1 a.m., 2 a.m., 3 a.m., listen to conference calls, running projections, trying to figure out, thinking about these companies inside and out. Okay, am I missing something here? Well, what if this happens? How am I going to play this? Okay, if this happens, am I going to buy more of the stock? Am I going to sell it? Am I going to hold? What am I going to do? Gosh, it's a lot of work. There's a lot of pain, but you can't deny the fact that, the dollar amount's there, right? And your dreams are there, your financial dreams, right? I mean, there's a lot of people that want to have more kids and literally refuse to have kids because they can't afford it. That's sad. So it's either you go through the pain, the work, to get to where you want to be long term, right? Or you don't, and you never live your dreams. Let that sink in for a moment. What do you choose? Some people say, you know what? I'm not willing to go through the pain. I'm not willing to go through the work. Yeah, I'll never live my dreams, but at least I won't have gone through that pain. That's just a life I can't live. There's never been a life I could live. I made a decision 17 years ago that I said, the life I want to live is the one where I do the things that you only get, from my understanding, correct me if I'm wrong, you get one chance at this thing. You get one chance at life, right? So in that one chance, you better take advantage. Because last time I checked, we ain't coming back. So if you have things you want to do in this world, you got dreams, you want things you want to experiences, be in that moment and be like, dang, man, like, I really did this. Like, I can't believe I'm here right now, like doing this thing, right? You better put in the work. You better go through the pain, or you're not going to be able to get that experience you want in life, right? And as humans, like, the biggest thing that I think always keeps us going is one day achieving our dreams. And everybody's got dreams. And if you don't, that's kind of a sad life, right? Everybody's got dreams. Everybody's deep down. Like, some people know what it is. Like, oh, I want to do this thing, right? Some people, you got to dig deeper. It's in there. You just got to dig deeper a little bit, and then you realize, oh, they got like all these things they really want to do in this life, right? All these things they want to achieve. And so anyways, just some thoughts on that, okay? For the pinned comment down there today, I'm going to put the application if you're looking to apply to join my private stock group, private wealth group, all that good stuff. Remember, January 1st, we're moving to $100,000 minimum net worth to join in there. So if you're under 100K net worth, you might want to get in there before January 1st. And also, we have our new lifetime membership card for anybody that joins on a lifetime membership. Usually just get your Steel membership card for 1000X and your private group Steel membership card. But now if you're a lifetime member, you get the black card as well. So do keep that in mind. And then we're now up to 2,849 members of the private group. So I'm thinking about potentially closing the private group to new members when we hit 3,000, and then opening it back up at some point in time in, let's call it 2026. The demand's been overwhelming in there. Just yesterday, we received another 100 applications after receiving 500 applications last week. It's been ridiculous. So that's going on there. Pinned comment down there if you're looking to join us in there, okay? Alrighty, let's react to this one.
Discuss TD Cowen senior retail analyst Oliver Chen. Oliver, it's great to have you here. And this is an interesting one because this stock had been on fire for a long time. It's sold in a number of retailers, and a number of retailers are having to go through some price adjustments. So can you explain to those that may not understand the particulars how that really did have an impact on the quarter?
Yeah, basically, Courtney, Elf is raising the cost of their product by about $1. There was a slight disruption in terms of retailers taking a little more time to raise the price, and the company stopped deliveries to those retailers until they did raise the price. So that was an issue in terms of core ELF brand growth. And that is overall an issue too, as core ELF brand is growing around 2 to 5%.
And listen, ladies and gentlemen, what is that? What is that he just said there, right? You know what that is? It's two things. One, power. Elf has a lot of power. By them basically telling the retailers, we're not sending you product till you go, that's power. Not all brands can do that. But Elf, you don't have Elf, you're irrelevant. Your Target, your Walmart, your Amazon, you don't have Elf? Like, that's what the kids wear. Like, have you talked to the millennials? Have you talked to Gen Z? Like, okay, they're going to go somewhere else to get their Elf products then at that point in time, because the best products for the price point you can get them at, right? And so, like, most of their cosmetics products are under $10, and they're high quality. Like, customers love them. So that's very substantial in regards to that. The other point in regards to that is what? Guess what? Short term. It's a short-term nonsense thing, right? Okay, it affected the numbers negative in this quarter. Who cares? If you're planning on owning Elf for the next 3, 5, 7, 10 years, it's irrelevant. Yeah, it hurt the short-term numbers. Whoa. You know what I mean? Like, whoa. Oh, gosh. We're screwed for the next 10 years because Elf didn't send some product to some retailers because the retailers were taking too long to, like, it's like, you won't even remember this. Like a year from now, you won't even remember this. Never mind 3 or 5 years from now. Give me a break.
In half. This is a brand, Courtney, that grew around 20% previously. So it's a very good company, and we are recommending the stock on a long-term basis, but expectations were high, and we thought expectations were high coming into this quarter, and growth has decelerated.
And so even though they're going to have to take these price increases, you don't believe that it's going to deter demand for this product. Obviously, this is a lower price product than some other makeup brands out there. This is more mass, less prestige.
Yeah, we see consumption trends as being quite attractive in terms of 7 to 10% in the market, but retailers are destocking and they're facing tough comparisons. So the reality of ELF core brand growth is moderating relative to the past, but it's still growing, and it's a very innovative company that reacts with speed. The stock is down a lot because expectations were very high, and this had grown a lot faster in the past. But the backdrop remains pretty good for beauty in the long term, given that it's a resilient industry.
Love to move on to Tapestry again.
Okay, so now you want to talk about a scenario where ELF stock becomes an absolute rocket ship, short term meaning the next 3 months, and the stock goes from $70 to $120. You want to talk about that for a moment? How does that happen? I'll tell you exactly how that happens. There's a potential Trump tariffs could be overruled by the Supreme Court, right? Potential. Might not happen, might happen, we don't know. What happens if it is? One of the biggest beneficiaries in the entire stock market is ELF, because they would see massive money coming back to them. And think about it like this, right? They're going up. They're going up a dollar on all, pretty much across the board on their products. Let's say they don't have to start, pay that tariff anymore. Do you think they're going to go down $1 a product? Of course not. So then their margins would explode to sky-high levels that we honestly haven't seen. So in that scenario, you would likely see ELF go from $70 to $120, and it would happen like that. You want to talk about ELF being up 20, 30% in a day, like it just was today? Had those tariffs get removed? There you go. So I'm not planning on that, but just understand, if you think you've got all the time in the world, like, oh, I could buy ELF for the $70 a year from now or something like that. We'll see about that. Next up here, let's talk about high net worth individuals, talk about what they're doing with their money, my perspectives on this.
It's Robert Frank. He's got the details.
Good to see you, Andrew.
Nice to see you,
back. Only a third of millionaires, in fact, surveyed use a wealth advisor, and among those who do, many are planning a change. A survey by Long Angle, that's the network of high net worth founders and executives, found that using an advisor does rise with wealth. So only 22% of those worth less than $5 million use an advisor, while nearly half of those worth more than $25 million use an advisor.
Do I personally use an advisor? No, I do not. I do not use a financial advisor. I have no interest in using a financial advisor, right? I can understand a lot of people wanting to use a financial advisor. It really depends on how much you trust your decision making, right? How much you know about the financial markets and emotions. It's not just about like, oh, I got to understand income statements, balance sheets, cash flow. Understand most financial advisors don't even have a clue how to properly value a company. They're financial advisors. I would describe them as very good for basic personal finance stuff, right? Like more income than expenses, like let's make sure we own some, index funds, things like that. Like, maybe some tax related things, although financial advisors aren't even going to help you a lot. For most of them, they won't help you a lot with taxes. They're going to go ahead and send you off to a tax professional. I wouldn't be surprised if they get a fee on that as well, right? So, so some people, I understand them needing a financial advisor. Like imagine, you're married to somebody, they make a ton of money, they pass away, you don't know anything about money, right? Like, gosh, you should probably get a financial advisor in that situation. So you don't screw everything up. Or some people that maybe they gamble their money too much and they need somebody overlooking things, right? Or they just don't really care about money that much, but they came into a lot of money. Either they inherited the money, or maybe they were just really successful at business, but they don't know that much about money. Like, I understand those individuals using financial advisors, right? So a lot of it comes down to that, right? Teach its own, right? For me no.
Them are considering switching advisors, with most of the complaints around cost, a lack of personalized service.
The one thing I do as far as a professional, I do use a professional in regards to something money related. And you know what that is? Taxes. I outsource that to the professionals. I let the professionals handle my taxes. I've been doing that for years. I think I first started outsourcing my taxes to good professionals here in Vegas. I think I did that back in, like 2018. Like once I got to a certain net worth, which I will not describe, but once I got to that number, which was in 2018, I said, okay, I'm handing this off to somebody else, right? And that's when I went ahead and made that move. And ever since then, I've always used, professionals for taxes, because you want to stay out of trouble with the IRS, right? Like I'm not trying to have any beef with them. I make sure everything's handled. The individual I use has actually a lot of authority at the IRS. And so, there's different levels of respect depending upon certain titles and certifications you have and your connections and things like that, right? So that's the one thing that I could, honestly, everybody that's higher net worth, you should use a professional for your taxes. If you make, $60,000 a year and you got a net worth of $40,000, does it make sense to use a tax professional? Probably not. It could, but probably not. But if you get your income to six figures plus, if you get near net worth, certainly over $1 million, but certainly if you go to multi-millions, use a tax professional. Because remember, these tax laws are changing all the time. Every year when I finally have my meeting with them, they tell me about this thing changed, this thing changed, this thing changed, and now you can do this and blah, blah, blah. I don't have time to keep, my focus needs to be on making money, right? Like that's where I can get the best ROI. Saving money on taxes, I'll outsource that. And usually the ROI you get from using a tax professional is going to be easily, especially if you're higher net worth or higher income, is going to easily be usually thousands or tens of thousands of dollars. And you're not going to pay them thousands or tens of thousands of dollars. So it's one of the best ROIs you can probably ever get, just to be honest. And in terms of peace of mind, right? Because let's say you get audited, you do your taxes yourself, right? And you got a multi-million-dollar net worth and you make, $250,000 a year, blah, 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 whatever, right? Ooh, when you get audited and you don't have a professional representing you who has some authority at the IRS, good luck.
Response times. Now, the survey also asked millionaires to rank 14 other professional services commonly used by the wealthy, from personal trainers to private schools, accountants, and estates attorneys. Personal trainers ranked highest on the satisfaction score with a 9.3 out of 10. Personal sports coach, private schools, sports coaches also got high satisfaction marks. Accountants and estate attorneys, though, they ranked below pool services. Therapy also ranked near the top.
Yeah, because one's like you just need it.
One's
the other,
like you need it, and the other one's like
you want it.
you want it. Yeah, and in fact, when you look at therapy, this was an interesting one. Millionaires under 40 were 3 times as likely to use a therapist than those over 50. Now,
That's just generational, isn't it?
It's absolutely generational. Emotional health being a much more important issue for this group. You can find all the numbers and how much the wealthy are paying per year for all of these services. That was really interesting. How much they spend on private schools, private trainers, all that stuff. That's going to be in your
read this
newsletter coming out in the next hour. CNBC.com/Inside Wealth. You guys have personal trainers, right? You certainly
yes,
look like
and I'm an emotional wreck, but I may need therapy.
Have you ever?
So, by the way, in regards to that, and it's a serious subject here, when it comes to like physical therapy, like personal trainer, right? I think that's a great thing for a lot of people if you get money. If you have trouble holding yourself accountable and you don't really know that much about working out, right? Like if let's say I never played football because I had an unbelievable strength and conditioning coach. I played football for 5 years, all 4 years of high school. An unbelievable strength and conditioning coach. He was so ahead of his time. Like I see professional athletes doing certain workouts that he had us doing back when I was in high school in like 2004, 2005. He was like, this guy honestly is a legend. Like in my eyes, his name was Coach Schmidt. Coach Schmidt, legend. I'm like, I see NFL players doing the workouts he had us doing back in the day. And I'm like, dude, this guy was so far ahead of his time, it's not even funny, right? And then I ran track. I was obviously a sprinter in college, right? So I know a ton about working out, like, about as much as you can know. And then I'm able to hold myself accountable. But I can tell you, if you don't have all that knowledge, and if you are in a situation you have trouble holding yourself accountable, 100% get a personal trainer. It's well worth the money because they'll help hold you accountable, and they'll be able to, obviously teach you a lot if you don't know that much, right? And your physical health, your health is everything. You know what I mean? Like you could be a billionaire if you're in poor health. Oh gosh, you'd wish you'd have $100,000 to your name and be in good health. Good health, right? Like it's not worth it if you're in bad health. It's awful. And then in terms of like therapists and things like that, yeah, if somebody's going through something or has trouble dealing with something or whatever, like that's always a good option as well, right? But keep in mind with all this stuff, personal trainers or if it's a therapist or something like that, right? Not everybody's created equal. You got to find really good ones. Same thing with taxes. You might assume every person that does taxes, they're all the same. They're not. They're not. You might assume all lawyers are the same. They're not, right? I always am willing to spend as much as it takes for top tier tax people, top tier lawyers whenever I need them for something. That's like, I get the best of the best. And I would do the same thing if I had a therapist. I would do the same thing if I had a personal trainer. I would get the best of the best, because at the end of the day, your results will go up significantly in any of those sorts of categories, right? So yeah, your health is everything.